Yolanda, we had a bit of a soggy start this morning, but it looks like the market is picking up some momentum as we head into the afternoon.
Yes, Stephen, we see it's being led by our dual-listed commodities higher, really being supported by a slightly weaker rand, and the rest of the market seems to be quiet, or rather quiet. Volumes are very low, or really just looking forward to the MPC rate announcement this afternoon.
As you said, the rand slightly weaker, around 743, and you said the dual listeds and the miners, BHP Billiton up nicely, Anglo up nicely, SAB Miller also up nicely. So they're really supporting the market, because I see the financials and banking shares in particular are under pressure.
Yes, Stephen, it's quite a mixed bag when one looks at the rand. Your rand hedge stocks, especially your retailers, are a little bit weaker, and your banks are stronger. Weaker off the weaker rand, but definitely led by those, and we can see the rand weakness is definitely helping them.
Well, what's Nedbank expecting from that MPC announcement today?
Well, there's a marginal chance that we could see a rate cut of possibly 50 basis points. We've had, we need a bit of support in terms of our economy, and possibly the really bad jobs data that we've received lately could possibly push us through for another rate cut. But a marginal chance this afternoon.
Of course, we had Ben Bernanke last night speaking and saying that rates in the US were going to be kept low for some time to come, and that really giving the US markets a boost. Do you think if we had a rate cut, it would help our banks and retail shares?
Definitely, it would definitely help them in terms of our retailers. That would encourage more discretionary spending going through. It would really help the consumers, especially through our Christmas and our holidays. And if we looked at the States yesterday, we saw the retail numbers coming out better than expected, and really a lot of positive out there with the holidays coming up that would really support. And then, of course, in terms of our bank, that would lower the debt cost ratios. So definitely positive for banks and for consumers and retail stocks.
Of course, we're getting our own retail data out tomorrow. The previous reading was a 7% contraction, and I think the market's looking for another sizable contraction when tomorrow's reading comes out.
Well, in terms of Nedbank's view, we're expecting it to come in much better than the previous month. We're expecting a year-on-year contraction of so from 7 to 4.7. Just really the effects of the interest rates coming through. I think we're going to see retail sales coming in better. With July's number, we saw really good consumers taking advantage of the sales, perhaps eating up their disposable income. We saw that coming through in August. We saw them pulling back, so I think we'll be surprised with the numbers tomorrow.
We had results out from Reinet this morning, and of course that's the investment holding company that was spun out of Richemont last year. An increase of 22% in net asset value, but this is really just a play on British American tobacco, isn't it?
Yes, it's definitely an asset linked to British Tobacco, and we could see the results were pretty much in line with Nedbank's view, and we think that the price has been supported by the restrictions from investors in terms of your foreign investments, so that investors have had to sell BTI and buy Reinet. And that's really supported the price. The price is currently in hold territory, close to its fair value. If, however, we see that BAT loses its inward listed status, which I think they're busy with in terms of negotiations at the moment, we could see a bit of a trend reversal where investors might buy BAT and sell Reinet, but also still pending the status or possible status change on BAT.
Of course, the other big trend that continues in the market is the gold price. We went up to $1,140 last night in New York trade, putting off slightly at the moment. So I see gold miners on the JSE are a little bit under pressure this afternoon.
Yes, Stephen, when one looks at the gold price, it just seems like it's heading towards a 1,300 US dollars an ounce, and still quite strong. And if the market seems to have the impression that in terms of the different reserve banks that are buying into gold, buying from the IMF, that it's possibly a stock to look at. A commodity to be purchasing at the moment. In terms of the gold stocks, we see them coming off today, possibly on profit taking as the gold reached its high overnight.